All right, how you guys doing today? For recording purposes, this class today is going to be on market structure. And I also do want to speak on um common things to avoid when trading in the market. Um we're just going to gradually just fall into that. We're going to start over here on Google. One thing that I would suggest to everybody is when wanting to understand something, um let's always keep in mind that we have Google, right? And we can always Google something. So back up, let's go. So we can have a better understanding or overstanding of what we're learning, right? So market structure, I also put in stocks in here because if you just put in market structure, it may just talk about any market structure, right? So I like to be detailed when I'm wanting to figure something out. So coming over here to market structure, you may hear the word market structure and it may sound extremely fancy, or you just may be like, man, I just don't get what market structure is, right? First I'm going to read this and then I'm going to highlight a couple of things that market structure is. Market structure is the behavior not slash, but the behavior, condition, and current flow of the market. It highlights support and resistance levels, swing highs and swing lows. A trend market is simply a consistent direction of price movement over time. My bad, I hear my baby crying and it's like throwing me off. Um, so basically it's a trendy market, right? And I'm going to break all this down so it doesn't seem confusing, right? So how I like to look at market structure is support and resistance. Why? Because what does it say? Market structure is the behavior, right? So what is the behavior? The behavior is going to be the fluctuation of the price action that we're seeing, right? So remember when we say price action, we're just talking about an opening candle and a closing candle, the low of that candle and the high of that candle, right? It's much more easier and simpler to just say, hey, a candlestick, right? Or a bearish candle, a bullish candle. And I'm learning to just be a little bit more simple, but you may go somewhere and you want to know how to speak in chart or in investing language, right? I would say charting language. So the behavior is going to be your price action. How is it fluctuating, right? And also I would add a conjunction of price action, right? When you have a conjunction of price action, you end up getting patterns, right? So it's the behavior of your price action, right? And I would also say that's the condition of it as well. But honestly, the condition now thinking about it in my mind is going to relate a little bit more towards, is it consolidating? Is it uptrending or is it downtrending, right? So the behavior is more so the fluctuation of your price action, and the condition is going to be, dang, I just lost my train of thought, but the condition is going to be, dang, what did I just say? Oh, I'm so sorry. I'm a father now. I keep hearing this baby cry. I know my wife got him, but I'm like, I haven't seen him all day and it's just throwing me off. Um, the condition is going to be not the fluctuation, but gosh, I just left my mind. What did I say? Let's see if anybody's paying attention to me. What did I just say that the condition is?
You say the flow, whether it's trending or something? No,
Mm-mm.
you didn't say that. Okay.
Let me close this. Nah, so the condition, dang, how did I just say that, man? That just came out so naturally. The behavior, how it came into my mind is that the behavior is going to be your price action, right? It's going to be just one candlestick, right? And it can be a conjunction of candlestick, but it's going to be just the high and the low of that candle. How is it performing? Let me move myself all the way right here. How is it performing? And the condition, it'll come back to me because I'm not going to try to fight my mind to try to remember it. So you have the condition. I'm just trying to move as slow as I can because I know a lot of people like to see how I think about the chart and try to give you my fresh thoughts. I don't like to like plan a class. So the current flow is, oh, that's what I said. See, because the flow came in. The condition is going to be whether it's in a consolidation period or whether it's in an uptrend or a downtrend. Thank you, Father. So behavior is going to be your price action. How is it fluctuating, right? It can be a bunch of candles together that form a pattern, right? But the condition is going to be, hey, are we in an uptrend, right? Looking at this line right here, are we uptrending or are we downtrending, right? Or are we consolidating, trading sideways? That's your condition, right? And the current flow of the market, the current flow is everything that I just spoke on together. So what is that going to do? That is going to highlight your support and your resistance, right? Why do I say it that way? Because now I'm just, and I'm going to take you to a higher time frame so I can really break this down for you guys. But I'm just going to use this one candlestick here. This bullish, let me move a little bit slow, this bullish candlestick. And if I'm moving a little bit too fast and you're not able to see what I'm doing on the screen, just please drop a 1 in the chat. I'll check it. If I see a 1, I know to slow down for you, right? So I'm going to go ahead and place the line right at the close of this big green candle, right? And I'm gonna put one right here at the opening, right? I'm not utilizing the wicks, right? I'm not utilizing the wicks. It's the bodies of the candlestick. So with that being said, you can see how even when we break out of here, if you miss this whole move, right? And it was only what, like a 24-cent move. If you miss that whole move, it's always going to come back. Not always like right that second, but whenever it comes back into this range, that's the range that it will play, right? We're going to talk a little bit how I know how to find this bounce. I'll just tell you really quickly for the people that have been following me for quite some time, is the bodies of the candlestick, right? So I'm going to find that bounce on that body of that candlestick, right? So long story short, you can see how it still played. This is support, resistance. It breaks a resistance to reclaim support on this time frame, right? Just on the 1 minute, and you can see it trying to travel up because it hit another resistance. And the resistance, how I'm going to find it is the bodies of the candlestick. I'm going to just draw one right here, right? Literally right here, right? And it matches up completely perfect. And then what does it do? It matches up again completely perfect with the body of this candlestick, right? So we're now seeing that is true support and resistance. You can even see it right here, right? I'm going to finish explaining this so I can really explain this, right? So support, resistance, hits another resistance because it reclaimed this resistance, turned to support, came back down to its level, right? Once it came back down to its level, it tried to revisit the next support, but it found support here, right? And we can bring it down, like you can see like the order block. We can bring it down to that pin bar right here, because we can see how close to open, both of these candles are just flush. That is market structure, right? So I wouldn't say that that's market structure. That's how I like to look at market structure. And it's going to make more sense because I'm only utilizing a 1 minute chart. It's going to make more sense when I go into a bigger time frame, why I like to look at market structure within one candlestick, right? So now when we broke here, not broke, but when we bounced here, we revisit, and I'm going to just go ahead and delete this so we don't get confused. We went ahead and revisit the resistance again, right? We broke the resistance and closed with a nice bullish hammer, right? That is important to identify when you know what each candlestick represents, right? We know we closed with a hammer. Once it closed with a hammer, we got a little bit of indecision right here, right? We know that this is a resistance, so we know to find a little bit of resistance, right? I mean, a little bit of indecision right here. Just like we had some resistance here, it started to bounce. We found some indecision in the market right here, right? That's what the doji is going to allow us to know, right? The doji is going to let us know whether the trend is going to either change or continue. That's what they both do, but having other things on your chart helps you identify with that doji just a little bit better with the price action, and I would say my RSI and me utilizing the strat, right? So with that being said, that's going to be your support and your resistance. You just reclaimed it, right? You got a nice bounce. Whenever you see that, just keep in mind, all that is a break and retest, right? That's a break of your structure, of your resistance, and that's a retest, right? Once it retests, boom, takes you straight to the next structure, right? Now I just want to bring you over here. Let me find exactly, it was right here, this hammer that I utilized, and that it was perfect right here. This is how we can tell that this is a great resistance, and this would also be great to be able to enter into your trade. Why? Because you have all these bars right here, and these are going to all be levels. What I mean by that, I'm going to utilize a different color so you don't get too confused with these colors, and I could color coordinate them. These are new ones, and I'm going to drop another one here, right? So I'm just utilizing this bar to this bar, not to the bottom of that bar, right? But then we can go right here, and I'm just going to put another one here, right? And I'm just going to go ahead and put another one here, right? That's how you truly find support and resistance, right? You see how we can go all the way to the back? I didn't do it right there, but you see how it's perfect there with if you're worried about always getting faked out, is because I wouldn't say but you haven't identified, and it's okay. You haven't identified with true support and resistance. So you're seeing a wick and you're just like, oh, it keeps bouncing from this level or rejecting from this level. And you have to understand, it's just like, yeah, a high five. You know what I'm saying? I went for that high five. Is not to say that when I jump for the next high five, that I'm going to go that high again, right? That's just your highest point on that time frame that you was able to achieve, but that doesn't matter. What matters is where it closed, right? Because that's going to, wherever it closed, right? You got to support wherever your candle opens at. I like to look at, I'm speaking on a green candle, right? So you have a support right here. As soon as it opens up, it wicks down just a tad bit. Support is holding its support, is trying to push up to the next resistance. The first resistance it's going to have is that candlestick. The next resistance it's going to have is that candlestick. After that, the next resistance is right there. That's how we know we're taking that move. Because that is like, it's showing us, regardless of the fact, the chart mirrors itself. Even if I was to take it and fold it from here, it's going to mirror itself. This price action is just above, and this one is below on this one, but it's going to mirror itself, right? So I'm just trying to drill into support and resistance. Alex says, we broke that neckline confirmation trend reversal, beautiful price action. Absolutely, brother. Absolutely. I definitely agree with you. I don't want to get lost with patterns in the neckline, because I was about to be like, yeah, you see that one? And then you see the head and shoulders inside of the inverted one. But yeah, long story short, amazing eye, brother. So that's going to be your support and resistance, right? And let's go ahead and bring that back over here, just so I can break this down, right? That's your support and resistance. I think this is where people start to get confused a little bit. Your swing highs to your swing lows, right? I'm going to utilize this chart real quick. Let's just get it to open up, since we just have it here, right? So before I go into the candlesticks and show you swing, oh, I'm so sorry, my apologies. And it's because in my mind, I know that I'm going to be doing a support and resistance class, but I apologize. Can I please get a 1 in the chat, or let me know if you're overstanding right now where I'm at in the class with what support and resistance is? And I got one more thing I'll show you guys before I move on to the next topic. We got some ones. Appreciate it. Y'all following through. If you're not overstanding it, drop a 2 in the chat. And that'll let me know that some certain people need a little extra work on that. Maybe we'll get a one-on-one session on, or I'll just, I know I'm going to do another support and resistance class. All right, cool. So people are overstanding that. Gotcha. So, and this is one thing I wanted to show you. you don't have to focus too much on these lines. Well, this is what I will tell you. I'm going to switch the time frames. So everything's going to look completely different. You can now look, when I switch the time frames to a smaller one, you can now look at the orange lines as supply and demand, and you can look at your yellow lines as support and resistance. All right, and I'm gonna just take it over to like a 5-second chart. And it's just because I started on the 1 minute. And I'm gonna show you why price action today is sitting up here. I'm not gonna forget, but that's just a little bit later, but that's gonna be about the market structure, but it's gonna, I'm probably end the class a little bit like that. All right, so there's the 5-second chart. So I just got to travel all the way through so you can be able to see this, right? So we got some price action here now, right? And this is what I mean by you can look at the orange ones as supply and demand, right? A demand zone, bought it up, boom, 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 take it straight to a supply zone. Guess what? It's going to come right back down to that demand zone. Boom, this time not that low, because remember, the people, I know there was only a few people that stood on live trading and it turned into a class later on. They needed that liquidity, right? They're going to need this liquidity for later. And the chart will always do that, right? We'll take out a whole bunch of liquidity. Like that was liquidity. All the bottom of these candles, after it ran up, people are putting their stop loss there, stop loss there, stop loss there, stop loss there, stop loss there. So anybody that didn't take those profits, right? Boom. And this is just a 5-second chart. But remember, this works on any time frame. So it traveled all the way down and it took out every single one of those liquidities. That's why you see it go. And when it does that and wicks right back up, it's taking out all those imbalancements, all that liquidity, right? Came all the way down and left a little bit of liquidity to take to be able to take them out later on, right? Boom. After that, a demand zone again, straight into your supply zone. This time, your supply zone, I'm gonna show you this because it's easier to show you with this, right? We have and it's going to be backwards for right now. We have a resistance up here and a support here, right? Boom, boom, boom. We're chilling at a support, but guess what? Your support breaks. So as soon as this support breaks, this line here is now resistance. You see it? Your resistance your support now turns into a resistance. So it's going to play these levels. Then it breaks down and keeps going that way. And that's why some people get faked out because well, in my experience, I'm gonna speak in my experience, when I used to get faked out, I didn't understand playing the ranges, right? This whole range, how it fell right here is one big candlestick on a bigger time frame. And it chose to boom, direction down, and it started playing the bottom of that, the next candle to the left of it. It started playing that range, right? And you got to be able to understand that. So now that I broke it down that way, right? This supply zone became demand. What I mean by that is support turn resistance. That's why supply and demand are the same thing. But then you're going to find somebody that's going to tell you something a little bit different about it. And then it may sound, it's the same thing. It's the same thing. I promise you. It's just supply, demand and supply are bigger ranges. You know what I'm saying? You can get a bigger range for your supply and demand because that's where it's truly going to go to the top of that range, right? But support and resistance, it's just a little bit smaller because it's within each candlestick, literally each candlestick. But the way you start to identify with that is a bigger time frame to the smaller ones. And you'll start to see it even when you start charting your own chart, like, whoa, it came back to this level and look how it reacted, right? So we have this resistance, or I should say supply, turn into demand, right? We get into another resistance. Look how it's trying to turn it into to create support up there. We couldn't hold, came back down to the resistance, which turned into support, started bouncing for the support, started bouncing for the support. You see it? Now it's hitting another resistance. This is what I mean, that supply and demand are bigger ranges, support and resistance. Look at how they play. They're going to play this level, try to create the support up there, boom, hit another resistance, come back down and test that support, come all the way back down just to take out liquidity. Is not to say that it doesn't want to hold. That's why the patterns are subjective. Because you fell off of this shoulder, head, shoulder, straight into a inverted head and shoulders, cup and handle breakout, right? You have to know what patterns create what, right? So as we see that is going straight up, and you see how it's boom, plays right there, boom, comes back down, boom, boom, boom. How did I know it was going to do that on a 5-second chart? Because I do this on bigger time frames, right? After it leaves all of that, that's why you'll never know. Like sometimes if you're not looking to the left, you're not going to know where your next support is at. I knew that this would be a support. Why? Wrong one. Delete. Why? Because that was a breakout. But I must show you how to be a sniper. Never put it there. Why? Always go to your old price action. Right? Bodies. I can't really tell if it's a body, but I'm putting it right there. That's where my resistance is at. I see multiple touches, and it really doesn't matter about how many touches. You just got to know that that's a resistance, that's a support. It can touch one time, literally, and break it. Or even the support, right? It's just things that we tell ourselves to feel a little bit more comfortable in the trade. But long story short, see how I moved it from being at the top? You see the breakout now? Look, a little bit, boom, bow, bow, bow. Because the old price action is going to really tell you what's going to go. Now you put it right here, not here, but here. And see, I know that this is a wick, so I'm putting those bodies. You put it here, not to trade this. You can trade this, and if you learn how to use your support and resistance, you can trade that. But just to know what really is going to go on here. You see how this line is going to bounce correctly. Look, came back into this range. Demand. Goes back up. What do? Go to your left. I'm just teaching you about support and resistance right now, right? Just drilling it down. But I remember everybody said that they understood that. So I'm not going to drill into that too hard. So we're going to come over here to the 1 minute. And we're just going to go ahead and delete all of this. And now we're going to break down what swing highs and swing low is. Before I get into that, can I get a 1 in the chat if you know what swing highs and swing lows is? Can I get a 2 in the chat if you don't know what a swing high and swing low is? So I can know how to go about it. Got it. So Chuck, I got you right now, Chuck. All right, awesome. All right, Chuck. So before I go into the chart, and for anybody else that may not know, your swing highs and swing lows, this is not going to be perfect because it's just lines, right? So what you want to look at is your low. This is going to be a low, that's going to be a high. So after this line after the chart goes up, right, and creates I like to look at that support, but it's support to its resistance, but a low from a high is going to revisit that low again. It doesn't have to go to exactly this low. It can have a low right here, like a pin bar or something of that nature, and it's going to take out that low, right? Because it's from a low to a high, and it always does that. That's why you see channels, right? This one's a little bit better to explain, actually, because it got a lot of curvature, right? So we have a low here, we have a high. So it was going to want to swing low, but it only went to, I don't want to say 50% of retracement, but it did. But it took out some lows right here. It took out enough liquidity to go ahead and bounce it right back into a resistance, right? Now it took out the swing high because this swung high, swung a little bit low. Now this one swung higher than that one, right? After that happened, it came back down to take out all these lows. Now I'm going to go into the chart to explain that a little bit better. Right. And I'm just going to utilize a 1 minute chart because we get a lot of lows here. Right. We get a lot of swing highs and swing lows. What I want you to understand is that after this class, you should understand that this is a trendy market. You're getting swing highs to swing lows. Take those out to swing high. Right. But I'm going to break it down in a way where you're going to really understand this. I'm going to start with these candlesticks here, right? And I'm only going to utilize these candlesticks. So we're just going to open it up about right here, right? Note, even though I'm starting here, and I'll end it all the way right here, and I'm gonna draw this line so you can know why I'm ending it here, right? So let's pull out our tools. So you got a high right here, right? We're gonna make it green, right? From that high, you have a low right there. We're gonna make these red, right? All these lows we're gonna make red. So as soon as this is not as soon as the market is open, but this is a high coming to take out lows, right? To take out liquidity to be able to push the price up higher. You have another low right there, all of these wicks. Another low right there, all of these wicks. Note that you hear me. Support and resistance, bodies of my candlesticks. I don't get confused. So bodies of the candlesticks every time. Market opens, boom, bell rings, doesn't matter. Bodies of the candlesticks is my support and resistance. Wicks, targets to smash out, to take money out the market, or to enter my trade. Why? Because that's what they're doing. They're going to smash those targets out because people are placing their stop loss there. Think about where you're placing your stop loss. It's at the bottom of a candlestick if you're going for calls. It's at the top of a candlestick if you're going for puts, right? So that's what they're doing. And the strat helps me with that. There's going to be a schedule out here real soon where I will let you know how I'm going to be doing my classes and even pop-up classes, right? So we go ahead and grab this one as well, right? You're like, but Moody, we don't got no more wicks, but you're saying it's the wicks that is taken out. Absolutely, absolutely, my loved ones, right? We just come down here, we see that that's like kind of right. What I'm looking at is this dotted line going straight through, right? So when I put it here, I'm looking at that dotted line, I'm like, it's basically right with that red line. So I don't need that one. I need some more lows, right? There goes a wick right here. I'm gonna allow you, let me help you see that just in case you can't. It's gonna be that wick right here off of that hammer, right? I'm gonna go ahead and grab that bad boy. Boom, right? We're able to see why my price action is going all the way down there to take out liquidity, right? We're gonna come all the way down here. We're gonna do that one as well, right? And then, of course, if you're looking down here, then, oh, well, Moody, that was the pre-market lows, the pre-market high. I'm not gonna tell myself that. I know that that's a strategy. I know what pre-market lows is and pre-market high is. But if I tell myself that, guess what? I'm going to be consistent at doing that and thinking, oh, it was because of the pre-market lows. No, it wasn't. It was because that was liquidity that they needed to take out, right? Once you understand that, you understand, okay, that's just a way to understand, okay, we had a pre-market low and we also had a marketing opening low that you can identify with that, right? But you just know that that's a low, right? Once you know about market structure and how to trade, how to trade it, right? We came down a little bit lower than this yellow line, right? That was the liquidity that they needed to take out as well. You see that they didn't take it out right there. They stopped at that yellow line, brought it right back up, right? So what I'm explaining here is from this swing high, right? Because this chart swung high, meaning high, low. From this low, next high, about to break this high, right? Comes back down low, breaks that high. From that high, comes back to a support. Overstand, Moody, just make it long so they can see that. Look, I'm gonna put it right here at this breakout because I'm support and resistance, right? Because it highlights support and resistance. That's why this was a resistance, turn support. Now it's gonna keep going. Once you can identify with that, that's just putting that into your swing highs and swing lows because that's part of your market structure, right? So now that you understand that, right, it's gonna come down, right? Comes back to your resistance to reclaim that support, boom, 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 right? And it's swinging high. These highs got to get taken out. You see how big that candle was? Ooh, we almost did them. Guess what? Some people got faked out. Boom. Don't matter that it's a 1 minute time frame. Understand this could be a 5 minutes time frame. What you're learning here works for all time frames, and this is how it's going to work out. Just because you're not seeing these big candles doesn't matter. It works this way, right? So once that high gets taken out right here, boom, creates a little bit more highs. Go ahead and get some lows out right here. It's swinging low a little bit, but it's not swinging all the way low. Swung low for another high. Boom. Swung low, took out that low. That's amazing for another high. Boom. That's how the market works. And that's why people like, when I know we break another a previous high, we may go up depending on the security, right? If the security moves that way, you may go up another $1.50 before it retraces. You know what I'm saying? But if it's a small cap, and I'm saying if it's Bank of America, that is not about to do that. Bank of America is going to break a high, come back down, break a low, and it's going to do that in the course of like 20 cents, right? And you have to know that. You have to know what it moves per day, right? And what it moves a week, right? Bank of America a week maybe just moves like $1 to $3 possibly, right? So long story short, swing highs and swing low, Moody. So we took out those swing highs, right? Came back down, took out those lows for another quick high, consolidation, right? Because when you see the chart trading sideways like that, that's consolidation. You see the chart going up, that's an uptrend, right? This is a minimum downtrend. This is a minimum downtrend, right? That's a downtrend, right? So after we did that, you got that high, try to go ahead and take out those highs. It starts getting a little bit weak, but I already see the bearish divergent happening on my RSI, right? And I'm getting I'm getting straight higher lows on my RSI. So I already know that I am about to go down, even though I don't see it on my candlesticks. I'm waiting for the downtrend territory, right? And we broke it finally here and came all the way down. These weren't breaking there, right? Moody stay on the charts. So long story short, once that happened, boom, guess what? Market opens up, bell rings, a little bit of action. There was an inverted head and shoulders there. People saw it, boom, it smashes up to take out that liquidity, take out those targets. Guess what? Boom, now the market goes right back down super hard because you just had an uptrend. That's when you hear Moody say, like when we're live trading, like, man, why we have to run up a pre-market? Because it's gonna take some time to try to even run up even higher, right? So they got to take out liquidity, all these lows, these red lines, took them out. This is when the market opened up. All these people that thought the market was still going to go up, sometimes like Moody, boom, got smashed out. Bow, 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 right? Right there starts to stop right here a little bit, right? Right? Boom, it keeps going. Bow, right? We still need some more liquidity. It's going up, faking people out, and overstand. All of this is getting more liquidity as well. We're taking them out their trade. All right, they got stuck. All right, they're stuck. All right, we took them out their trade. We just took them out their trade, right? People are having to force going back and forth, unless you're being patient. Like when you see me live trading, I'm like, nah, I'm just going to let the bears do what they do. I already know the market's still going to go up, and I choose a good strike price where it's not going to affect my capital, right? And make me too emotional. So long story short, after we take all them out, boom, overstand all these red lines on the bottom of these wicks, they will start to act like support and resistance. These are targets to take out. Soon as you have candles going through them, the target has been taken out. There's no money on those wicks anymore, right? You got to look at it like that. They're forced to buy the other direction. And now this turns into your support and resistance. And I'll explain that after I explain here, right? It started to go up a little higher, took out those liquidity, came back down strong for that. That was their low that they created today. Take them out strong, right? But it came all the way down to take out more lows. And guess what? That was your breakout. See the resistance? It's called support and resistance. They highlight support and resistance. If you trade your market structure, it's going to highlight your support and resistance. Resistance, see the resistance finally broke. We already created support up there. It also tested it and told you we're going this high. Are you patient enough to wait for that break? Boom, right? So everything that I'm showing you here literally is why SPY is sitting where SPY is sitting. I'll show you that here in a second, right? So now, after that, is now time to swing high, baby, right? Because we have taken out so much liquidity and we have even taken out today's lows, right? We're going to create some more lows. You got the double bottom and things of that nature. We start to push up high. Now I'm going to speak on, I'm going to speak on the swing highs and swing lows, but these red lines now turn into support and resistance, right? As you see, they came straight from my targets. You see how they're even stopping with the candle closes, right? This is something that I've cultivated and created myself. And I'm learning to say that, like, I've cultivated and created myself. I am self-made at this. And this is just literally 2 years and some change of trading. I'm on my 3rd year now. So it's like, I know that it's just going to get better and better and better. And this is why I tell people to chart, like, believe in yourself and do the things that you want to do, right? So now that we know that this is reacting like support and resistance. It breaks, goes to a resistance, right? We see the doji here, goes to another resistance. It was just like, nah, forget. Oh, well, let me explain why it's just breaking straight through. It's this big old candle. Remember what I told you? It mirrors itself. You're gonna get big old candle straight through that. You know, big candle, a little bit of a little bit of turbulence, I like to call it, some consolidation. This candle is called a spinning top, right? But what happens? It mirrors that candlestick. And you always get big candlestick when you have multiple wicks. That's when you hear me say PMG, 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 right? This big candlestick took out a PMG. Doom, all these like wicks, right? So long story short, you see how it stops right there, plays like a resistance, finally gets over it, you get a close over it, it's starting to close above it, boom, take it up, you got your actionable signal, dragonfly. Dragonfly on top of inverted head and shoulders. That's an automatic, yo, keep buying this up. You know what I'm saying? Like you can see the actionable signals here, right? Drops all the way down, finds the support, goes back up, right? Hits that green. I forgot why I put that green there. Oh, that was just the market opening, right? That was our high. It wasn't our high was truly up here, Moody, right? I just always like support and resistance, but that was our high, and we finally smashed that out, right? Boom, and created support right at our high, right? It's always going to do that, fake people out, because it has it. Let me explain it. Sorry. After we swung low, it's time to swing high. First high is right here. Swing high, that's why it stops right there. That's why I always call it your market structure. Stop that structure. Moody, delete all of this because you should be able to understand this. Before I delete it, does everybody kind of drop? Can you drop a 1 in the chat if you understand all of this right here? Like everything that I said, meaning support and resistance, these are your targets, and then it turns into support and resistance. All right, appreciate y'all. Appreciate y'all. All right, awesome, awesome. So I'm gonna delete all of this. And dang, I just deleted all that. What I was about to do? Swing highs. So, this is also why I call it structure. Like this one candle before I talk about the swing high, structure, support, resistance, structure, market structure is just within this one candlestick. How far am I? I really want to teach y'all. So, this is all the way in Tuesday. It's cool. Look. Remember, I'm just using this one candlestick, and this is off of a 1 minute chart. Watch the support and resistance. I really should have took you over to a 1 second chart so you can really see it go crazy. And when you want to learn things like this, is why I use the horizontal ray, because the horizontal ray is going to take me exactly, delete this, exactly at that candlestick. And there it is right here. We just got to the end of it. Let the price come down. And understand that I'm on a 1 minute chart, doing this to a 1 second chart. So you could do this to a 5 minute chart, to a 3 minute chart, 5 minute chart, to a 1 minute chart, a 5 minute chart, to a 1 minute chart, supply and demand. I told you, come July, I'm really gonna go crazy. All right. So remember, I did this off a 1 minute chart. You see this was just like in bad, this is still a downtrend, right? And it's trying to rebalance. But let's just look at it from here. This is the swing lows, taking all that out, found some support, straight into the swing highs, PMG, taking all the top of these candlesticks out. Boom, 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 right? And that was all one candlestick. That's why I'm showing it to you from 1 minute to a 5 second. We'll go, and if we have time, go ahead and do certain things. Real quick, things to well, I'm charting this up too sexy to do the things to avoid to it right now. I gotta find it. Give me a second. All right, so coming from here, let's finish out the swing highs and then we'll get into that. We're just gonna delete this one, right? You got your first high right here, and understand where I put these lines are also gonna be my targets, right? Boom. That's your second high. That's the second high that it needs to break. After that, you have a beautiful high right there. There's no reason to get out that trade until it hits that, right? Because you're going to retrace this whole candle And especially if you play the 50% retracement, you're going to see why it stopped right there. Right? So long story short, boom. That's what we want to do. That's your next high. What's your next high? Moody, this wick, right? Well, that was right there. What I'm going to do is delete. I see these candlesticks inside of this bar. So I'm just going to go for that one because I know that that's the range, right? What do I mean by that? Just try not to look at this red line right here, but the top one to the bottom, you see how I played that range? That range? That was just a range, right? So then this is your next one right here. And then this is when it gets beautiful because you see these big bars, you're going to have to retrace. You're going to eat them up. You're going to eat them up. They're going to look just like this. Look, where you at? Go ahead. Wrong. Boom. MSC chat. Look, I'm trying to make a joke out of it, and this thing going. Oh, it's right here. General chat. This is how they gonna look. Literally like this. Ouch. They don't look just like that. Just like this. Why everybody telling people to short the market? That's how they feel right now. Right? But you're seeing all these banks crash and all this stuff. You don't want to listen to, you want to buy the rumors and sell the news. And it is so true. I promise you. If they putting fear in your face and letting you see that, do the opposite. Are you feel me, Santana? I feel you, bro. So long story short, that's that high, right? And I want to talk about the 50% retracement, but we're going to keep it here and simple. And that's your next high, right? And that's why I took all of that out. And that's why I was like, man, no, it's going to be a straight bullish day. I just don't feel like looking at these candlesticks. You know what I'm saying? I just, sometimes you get like that, right? It's not that you don't want to make money. It's just a skill that you have and nobody can take away from you. So I can literally go trade at 11 o'clock right now, futures, like, or whenever I'm done trading. I said trading whenever I'm done teaching. So long story short, right? It takes out all these swings, has to take out these highs, right? Took out those highs, took out those highs, took out those highs. It's going to aggregate, right? It's not just going to shoot bonkersly up. Sometimes we get a nice little push like that, right? It's going to aggregate. And as it aggregates, it's going to go hit those targets, right? And one thing to understand, this is, and I'm going to use a different color now, right? This is the swing high that you have to take out, right? As you aggregate, you start to get new swing highs, and we're just going to make them yellow, right? New swing highs from lows. Boom, you got to take them out now, right? I don't got to put one here because that red line is basically there, but you also have to take them out. You see that? Right? From being there, you had to take that bad boy out. Boom, aggregation, baby. After that, you had to take them out, right? Come all the way back down low. You got a high right here. Guess what? It came back down. You got to take them out. Boom. Take them out, comes back down, right? And you see how perfectly it's still going with them yellow lines? Look. And I'm going to just put it like this so you can see how perfect it's going to be. I'm going to just put them on the wicks. You want to know why we know where price is going to go? You do not need to do it. I'm actually doing this the opposite way. I would never do it this way. Moody, do it the right way so they can see it. Because when I do it that way, it mind blows people. They be like, wait, what? If I do it this way, it may, and you'd be like, oh, okay, cool. So you want to know why, and this is how this is where price is at, right up here. I'm going to put a line here so you can understand as soon as I get over there. They created support up here. You ain't peep that. I don't stay on these small time frames. I trade on them. I execute my trades on them. I trade bigger time frames. And people are starting to understand that. I trade the 4 hour, the hour, I trade the 2-day chart, I trade the weekly chart, I trade the daily chart. I don't really like the daily that much. I trade the hour chart, the 30-minute chart, the 45, the 13-minute. You know what I'm saying? I do not trade the 1 minute. I am executing and trading on the 1 minute. So, right, and I'm gonna show you how they created some support right up here. And now we're gonna go to the back. Remember, I ain't draw no lines in here, and we're gonna use a different color just in case somebody say Moody was cheating. Now, this may take me some time, guys, but just bear with me. Oh, look, not that much time at all. Well, have you there, right? How far do you go to the left? It's not about asking, yo, Moody, is it 3 months? Is it 4 months that you're going back? No, go as far as back as the price action tells you to go back. If you're charting correctly, you will need to go back until that line presents you with, your price action. So we had it like right here. This is where price is at right now, right? You could definitely look, watch. This is it right here, right? Watch this. Watch how perfect we took out these targets. 441. That was a PMG. This is a PMG. That's why we went straight up that way. Because this is called a domino effect. They're too close to each other. Let's use blue. They too close to each other. I messed that one up. They shouldn't be too close to each other. Like, imagine you drop a domino. That's why it's called a pivot machine gun, right? Look, let me show you one more time so you see. See these lows? Do. Why do you think I keep this in my computer? I trade like this. I'm always seeing this. Always seeing this. It's on my phone. It's on my screensaver. I just had a baby. I wanted to put my son in my screensaver. No, I need to focus on what I need to focus on. So somebody starts talking to me about whatever they're talking to me. I just look at my, oh, okay, cool. One ear out the other. Okay, yeah, I gotta look at spot. I gotta do this. Yeah, I seen the reversal right there. Why? Because I can't stay distracted. You know what I'm saying? What do I mean by that? I could be learning whatever I'm learning or doing whatever I'm doing, but if it's not going to serve me in the long haul, I can't commit to that short-term decision. Why? Because it's a distraction. It's just something for me right there at that second, It's like, are you really thirsty? Start doing something and see how you'll forget that you was thirsty for an hour or whatever. And then, oh man, wait, I was thirsty. You really wasn't thirsty. Those were your thoughts. It's what you was thinking. It's what your habits of what you're doing, right? So just create good habits. And it's easy to create good habits, right? Just start doing things that you like. You know what I'm saying? You're on Facebook, whatever you are, start snoozing people. You don't want to befriend them, just start snoozing people. Oh, I don't want to see this anymore. Do that on your YouTube. It allows you to. It gives you the little 3 button. Hey, I don't want to see this no more. Don't trick yourself into falling into that. It's like having a craving. You know what I'm saying? Is M&M's good for you? No, but you may give into the craving one time, but are you disciplined enough to not to, right? Like, and we'll get into that because this is about, that's going to fall into the other stuff that I wanted to talk about, right? So you have that PMG, because we're going to talk a little bit about discipline and things of that nature. Because I believe there's a misconception about discipline, but for me. So you have that PMG. Let's keep going all the way up, my loved ones, right? Because we see the price up here. All the way up. We missed one right there. It's okay. You can't catch them all. You're not Ash. He's a cartoon. He ain't even real. All right. Let's get this last one right here. And I'm going to give you a gem because this is about market structure class. We're going to go a little further back, right? Because these lines are going to help us. But we're going to go a little further back. And we're going to color coordinate these further back colors, right? We're going to go right here. And also what we're going to love to do is take this 50 fib and we're going to go deleting stuff too, because we're going to need to now. Why? Because we just got into all this range, right? Because that's a huge candle. You're going to end up retracing that, right? Now I'm going to show you where SPY is going. Bada bing, bada boom. And I'm not even doing this on all good. That's where SPY is going. Right. And even right here from where we're at, we're only like $40 shy, lying, like 30 something bucks away from all-time highs. We're going to break it. So now I'm just gonna click this button right here, like that, like so. Bring me all the way to this price action right here. We're just gonna click right here and bring it all the way up. I know it looks like a huge crayon box now, right? All right. So now, and what we're gonna do is I'm gonna do all this manually. So just give me a second. Because I don't want your eyes to be like, oh my God, what the heck is going on? Why do I say that? Because my eyes are doing it. So if my eyes are doing it, your eyes have to be doing it as well. And I'm experienced. And you see how I'm doing this? I always rechart my charts. I always do that. I really I just be showing off when I be like, oh, I got to rechart. It's just because I know how to chart. So I say that. Always rechart your chart. Do not leave your chart charted like that. Because that's how you saw your chart that day. Especially if you didn't chart your chart from a higher time frame. Now, when you see my chart always charted like that, it's because it's charted from a higher time frame. So those levels are going to be extremely important. But if you're on a 15, 30-minute, you can rechart that level all day. All right, so now this is your zero, that big 50% retracement we took. You see that? Straight to the 50, straight to the 100. Remember, all these blue lines, remember that was the domino effect. Remember that PMG I was showing you? That's why it went parabolic like that. Boom, went straight up, just like that. And you can see, let me just open it up, because you need to be able to see that. Let me just doing them like that, Moody, because these are targets, right? And we should really start from this line here, right? Because we see the candlesticks going through these, right? Remember what I always say, it's going through them, there's now support and resistance. These are your targets. Watch how clean it hit. Hammer, straight up, boom, takes one straight to the next target. Boom, straight up to the next target. Look at the inverted pin bar. Boom, fake everybody out. Why? Because we just got the 50% retracement of that whole move. All right, let's go. Boom, boom, boom. Just taking them out. Just taking them all out. That was a strong move, right? And don't ever get confused. And you'd be like, oh, well, that was like 3 o'clock. That was because it's power hour. No, ladies and gentlemen, it was the price action. It was the price action, because does it happen all the time at 3 o'clock? No. So why, if it's power hour that's giving that move, what is it? No, it's not power hour. It's just the fact that a whole bunch of institution traders, we all know that this is the last hour to trade. You want to make some money. It's power hour. That's all it is. It's going to hold, or it's either going to reject the move that it's trying to give, hold it to try to sustain it, or it's going to fall off of it. 3 things that happen in the market: uptrend, downtrend, or consolidation. Previous price action is going to give us a heads up of what can happen at those levels, right? So now we're just going to delete all of these, so you can see where the price is chilling at. We explained that pretty well. If I didn't explain that pretty well, or even if I did explain it pretty well, but you didn't get, it didn't make sense for you, drop a 2 in the chat and let me know as I keep moving along. We're just going to delete these 2. No, we're not going to delete these. Oh, yes, we can. I'm going to tell you why we could delete these, because we got price action right here. This you would want because there's a big range, and you know you want to bounce off of this at the top and take it up higher, right? This one you also don't need, because I'm going to get it right now. And this is where your price is going. Literally right there. These are all still active. All still active. Ain't no candles going through these. Price hasn't even been up there. So this is how it's going to travel up there. Now you have your support and your resistance. You have your support right here. Bodies of the candlesticks, ladies and gentlemen. Bodies of the candlestick, right? And I do like to find multiple touches on there. This one is not there quite how I like it. That's okay. Still pretty flush right here, right? Bodies of your candlesticks, ladies and gentlemen. Now I'm going to take this over to a bigger time frame, because I'm telling you about price action. I'm predicting where price is going to go, right? So I'm just going to go and travel to the hour, because it's a larger time frame, right? Look how perfect that 50% retracement from a 1 minute is off this hour, because I was taking that whole range. Remember I told you that was a whole range, right? Body Yeah, I almost had it perfect, but ain't nobody perfect, right? So long story short, now I'm just gonna delete all this because remember, you see all this? I got it from the 1 minute. Remember I told you it's all the wicks? You don't even need all that. You do it just like this. Go to the 1 hour. That's where your price going. You got to take all them out. Why? Because that's a PMG. And you remember how many blue lines I had there? It's so many wicks right there. So many wicks. It was just like right here. So many wicks was right here. Why? Because there's an hour chart. This is 1 hour in the market. So if we know that this is 1 hour in the market, we know that that's 2 candlesticks on a 30-minute time frame. We know that that's 4 candlesticks on a 15-minute time frame. So we know that there's 4 wicks, 4 more wicks there that we're not seeing. Make sense? Right? That's time frame continuity and just knowing how to break up your time frames, right? And knowing what's going on. So does anybody have any questions so far? It'd be funny because a lot of people are like, no, we just want to learn, Moody. I don't got no questions right now. Keep flowing. Yeah, so that's support and resistance in a nutshell. I'm gonna do more classes on support and resistance to break it down a little bit better. Hey Ray, since you're on this class, because you was in different support and different market structure classes that I've taken, like even say the mentorship that I just did not too long ago, was this one a little bit different than that other market structure class?
Yes, it was. This is simple, easier to follow for some reason.
Appreciate it. Tells me I'm getting better at
Yeah, you're getting better.
appreciate it. All right, so from here, let me see. I just got to read this. That is going to remind me of some gems that I probably wanted to drop. Oh, yep, and that's everything. That's everything on what is market structure, right? So things to avoid, right? When trading. I don't have that much time. So I'm gonna make this a part 2 class, or probably just turn the last section into like a mindset class for you guys, but like mindset for trading wise. Or let's see how it flows or whatnot. So let me go into the chat real quick. Appreciate you, Tracy. Thank you so much. Would you guys know you would like that? Let me just give me a second here.